Thank you. Good morning, students. Welcome to our revisionary classes for the subject of cost and management accounting. And the topic that we have taken up today for our revision is the topic of cost accounting systems. So, as you know, the subject itself is named as cost accounting. But in majority of the topics, what you study is the costing aspect. That is how the cost of a product or a service of any process is computed. However, it is equally important to understand and expertise in how these costs are accounted for in the books which are maintained for the purpose of cost accounting as per the specific provisions provided in the Companies Act, which has made this obligatory for certain companies, plus as per the relevant cost accounting standards. So how you have your accounting standards, we also have our cost accounting standards, which provide for the manner of doing cost accounting, passing various entries, giving treatment to certain specific items. Now, today we are going to deal with cost accounting systems. Now, if you all recall, in cost accounting, there are two approaches which are given for the purpose of performing cost accounting. The first is called as the integrated system of cost accounting, and the second is called as the non-integrated system of cost accounting. So the two systems, integrated, non-integrated. Now, what is the difference? The difference is that where you are maintaining a single set of books. What single set? That is the books which comprise of financial accounting data as well as the books which comprise of cost accounting data. Then that is the integrated approach or the integrated method of cost accounting. However, this is not generally applied. What is applicable in general in industries is the second method, which is the non-integrated method. Under the non-integrated method, we prepare separate books for recording financial data and separate set of books for recording the cost accounting data. Now, the purpose why industry does not follow integrated and majorly follows non-integrated is if you are merging both the data, so you will have one P&L which has to be reported, and this P&L will then cover all the costing information as well, which no company would like to be publicized, because as you all know, cost is a very sensitive and internal data. So no company would like it to make it public, especially to its competitors. And anyways, for outsiders, the costing data is not relevant. So the purpose of accounting for outsiders is knowing the financial conditions of the company rather than the costing conditions. So that is why reporting of costing data is not compulsory under any laws. And that is why integrated system is not adopted. So companies adopt non-integrated system. So here I have taken some important questions which you find regularly the questions being asked on cost accounting, and I've tried to take up those questions for revision which will summarize majority entries. So this is the first question. I'll request you all to maybe take a screenshot so that even if I'm scrolling the screen for some purpose, if you need to refer back to the question, you'll have the question in front of you. So what does the question says? A company operates a historic job cost accounting system and it is not integrated. At the beginning of the month, the opening balances are, the figures are in lakhs. We will continue the same mechanism. Balance in SLC, WIP, finished goods. Now, these are the three common accounts. A new account is given over here is building construction. So, the company is itself undertaking the construction of its factory building. So, you have this account called as building construction. If I have to give you a parallel of this in your accounts, in accounts we have an account called as capital WIP. So this is what is the capital WIP. So instead of writing WIP or capital, we have written the name of the asset itself, what is under WIP. So that identifying it becomes easy, especially for costing purposes. Then you have the most important account in non-integrated system, which is the CLC. I'm sure you all recall what it is. Just for revision purposes, CLC represents debtors, creditors, land and building, plant and machinery, capital account, all types of reserves and surpluses account, all types of your liabilities accounts like bank loan, etc., etc. In short, CLC account represents all the assets and liabilities except your stocks. So keeping aside the stocks, all other assets and liabilities are represented by the CLC account. Parallelly, this is called as General Ledger Adjustment Account. Students, I hope it is clear up to this point. Any questions? Yes, anybody, any questions, students? Okay. So these are opening balances given, and then you have the transaction that has happened during this period, which is a month. So transactions of material, labor, and the overheads, and then some other transactions. Further, they have given you balances at the end of the period, plus some losses. Now something interesting is given, company's gross profit margin is given. So this is the data, the information, and we are supposed to prepare the relevant control accounts. Now, there is a sequence which you should follow so that your accounting, passing of entries, and later on balancing becomes very convenient. You should prepare the accounts in this sequence only, preferably, so that it helps you in passing of the entry smoothly. So first we have the material account, then the labor account, and then the overheads accounts. Now here in the sum for overheads, they have used the word works overheads. I'll also use the same word. And for selling, distribution, administration, they have made a combined account, so we'll do the same. Fine. Avya. So I hope you are also parallelly solving. See, we are in revision, so it is recommended that you solve it at your end and you compare it with my answer. The purpose is that when you will solve, you'll get to know what are your queries or doubts so that it will be more specific. I'll be able to even clear your doubts besides revising the topics. So, yes, I know you are solving. I just reminded you. Fine. Now, generally after this, we prepare the final account, which is the CLC account, that is the cost ledger control account. However, here we have a new account by the name building construction. So we'll prepare building construction account first and then we will prepare the last account. Now, as we normally do in accounting, we'll first post the opening balances and then we will start with the entries. So 80, 20, 430. Now, except CLC, these are the other balances. Now, in this sum, CLC balance is given. But let me tell you, there is one, you can say, adjustment. That adjustment is that at times in the sums, they may not give you the CLC ledger balance. Now, if that is not given, then you should always remember CLC balance is the net of all the given balances. So let us say in this sum also, if CLC balance would not have been given, I would have taken this debit, 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 debit. So all our debits, I will add them. The total will be the CLC credit balance. Had one of these balances been credit, so debit, debit, add, credit, subtract, the balance would have been the CLC credit balance, right? So 80, 20, 100, 430, and 100 is 530, and then 540. So keep this in mind, students. This is how you will identify the balance in the CLC in case it is not given in the question. Students, start passing the entries. I'm purposefully going slightly slow. One purpose is for those who are new to the topic, for them it will be digestible. Second, for those who are well versed with the topic, they should get time to pass their entries by their end first. So these are your accounts. Shall I give you 5-7 minutes? Make the postings fast at your end. In case anybody has any queries or doubts about any of the account or any other thing, you can ask me. Emil one of the student is asking for intermediate WhatsApp group link. Can you please share it with her? Okay, students, now let me discuss whatever we have done or you have done. Let us check. Chalo. Material purchased. Now simple accounting logics. Debit what comes in and credit the giver. So material purchase, for us, the material account is the SLC account. So material has come in, so SLC will be debited. And who has given this material? It is the creditor. But creditor under cost accounting is represented by which account? CLC. Correct? So you have to first understand what the transaction is. Second, understand what is the accounting effect in our normal layman language first. So first find out the accounting entry in layman's language. Then third, we will go to the cost accounting entry by replacing the layman language account with the technical account name which is given over here. Now, what is the second transaction given? This material is now sent for production. So it is issued to production. So now who is getting the material? The production area is getting the material, or the factory is getting the material. So factory is represented by WIP, where production is happening. And who is giving the material? The stores is giving the material. So now WIP will be debited and stores will be credited. Then material is sent for general maintenance. Now, when it is sent for maintenance, which account is representing maintenance? It is your overheads account. So works overheads debit. Who is giving? Material account or stores ledger account is giving, so it is created. Now the same is done for the next. Now material is being used for the construction of building. So now building construction account is the receiver, should be debited. And again, the giver is SLC. Right? I hope you all have the same transactions. So let me do the posting then. 40, 50, 64. 40, 56, 4. So if you can see, I'm passing entry in a particular manner. This will save time in exams. But then one thing you should be very particular about is that if you are passing entry like this, don't forget to give the second effect immediately. But if let us say I have all the transactions of material at one place, I'll first pass all the entries in the material account itself. This saves my time when I'm doing the final working. The only drawback of this is if you miss to pass any entry later, it can be then problematic for your question. Right? So these are the 4 transactions relating to materials. Now, when we come to labor, the first transaction is the gross wages paid. So obviously debit the expenses. Now wages is represented by LCC. And since it is paid, credit is what goes out. So cash is going out and cash and bank both are represented by CLC. Now, in gross wages, there are two components, direct and indirect. So out of this total gross wages, how much is the indirect component? 40. Now again, we know what is to be done for indirect wages. Indirect wages is part of works overheads. So we will shift it to works overheads account from the LCC account where it is debited. So works overhead is debited. LCC, who is the giver, will be credited. Similarly, building construction, LCC. Now, interestingly, they have purposefully not given you this transaction. But we know that out of gross wages, this is in fact always the main or the major component. Now, if gross is 150 and the other breakup given is 50, so we can identify this is the missing value, which is 100. So again, in this question, there is something which you'll have to also ponder on, which you'll have to work out, understanding or using the logics of that particular topic, right? Perfect. So if this is clear, let me again do postings of this. So 150, 40, 10, and then the balancing figure 100. So this has come from CLC. This will be transferred to WIP. So direct wages, as you all know, is charged to the WIP account. So from here, it will go to the WIP. This is works overheads, and this is building construction. This account is tallied. So postings, LCC 100, LCC 40, 10, and LCC 150. Then students, understood by all? No doubts? Yes? Is it okay? Now the transactions relating to work overheads. First is amount incurred excluding above items. Now, whenever expenses are incurred, you debit the expense account and credit cash bank. Here, cash bank is represented by CLC. Then out of the total, some part is going to be charged to building construction. So building construction debit, and it will be charged from this account. So works overheads credit. Now, interestingly, this is the balancing figure we find out at the end when we are balancing this overheads account. However, here they have given the balance. Now, what is generally the balance in the overheads account? It is the under or over absorbed overheads. Now, since they have given, we have to do the treatment. Now, what will be the treatment? The treatment will be any under or absorption is generally charged to the cost P&L account until and unless mentioned otherwise. Now, if nothing otherwise is mentioned, you charge it to the P&L account because under absorption represents your loss. But now this account is pending because there is something which is missing, which we can identify only at the end when all the other transactions are completed in this account. So 160, 20, and 8. Okay, students, if you are only comfortable and confident, then you should pass entries like this, like first putting everything in the overheads account and then giving the second effect. Otherwise, you simply take a piece transaction, give both the effects. So my next few entries, I'll be doing it that manner so that you even understand that approach. So do what is more comfortable and in the exam which will not bother you and you will be comfortably, confidently doing it. Now royalty paid. Now royalty is a direct expense. Now for direct expense, what we can do, we debit the direct expense whenever it is incurred. And since the credit is to be given to cash or bank account, we use the CLC. Second is direct expense is charged to the WIP. So the entry for charging will be WIP debit, direct expense credit. So these are the two entries for direct expenses. Now, since we are given only one transaction for direct expense, we have to pass both the entries on the basis of this transaction itself without using the direct expense account. So since we are not using the direct expense account, we will pass a combined entry of both these. So the entry will become WIP to CLC. So this is generally the direct entry in this um, in case of direct expenses, correct? So by WIP bracket direct expense and in WIP to CLC in bracket direct expense. Amount is 5. Or here I will write royalty just for your reference as to what that amount is, because in the question it is named as royalty. So let us call it as royalty only. Selling and distribution overheads incurred. So selling, distribution, administration account debit, and for payment CLC credit. Selling, distribution, and administration. Sales 450. Now, similarly for sales, students, there are two entries to be passed. First, for sales that has occurred during the year. So this we debit debtors, which is over here represented by CLC, and credit sales. Then sales are transferred to P&L. So the entries will be first for incurrence or occurrence of sales, and then for transferring the sales to the P&L account. Now in this, again, we knock off sales. Why? Because we are not opening a separate sales account. So your direct entry will be CLC, which represents debtor to cost P&L. Fine. Besides this, what else is given? At the end of the month, stock of raw material WIP. So again, students, these are the closing balances we find out ourselves by doing balancing. So they have given it here. Now, generally, when closing balances are given, it means there is a possibility that some other figure, generally which is given in the sum, is now missing, which we have to identify. So we'll post these balances. By balance carried down. The other was which account? WIP. Correct. What else is given? Now they are saying there is some loss which is arising in the raw material account, which is to be treated as factory overheads. Okay. Okay. So my raw material account is ready for closing. So there is opening balance, there is purchase, there is transfer to production, indirect transfer to overheads, transfer to building and closing. So everything is done. Still, when you will balance, there is some loss which they say has to be transferred to works overheads. So this is my balancing figure representing the loss. How much is this balancing figure, students? Can you balance and tell me this? What is the balancing figure in this? Yes, any idea, students? See, debit is 120. Now the breakup is 50, 6, 4, 10, 60, 60 and 55. So it is 115. So 5 is the loss. So 115 plus 5 becomes 120. Correct? So your material is also concluded. The labor was already concluded. Now, before proceeding, we'll see if something else is given. The building under construction was completed. GP margin is 20%. Okay, that we'll see once we go to those accounts. Now, WIP account. Now, here again, they have already given something which we find at the end, that is the balancing figure of under or absorption. So it means if this is given, then what is missing? The missing is the main entry, that is the amount which is charged to WIP, because you would be knowing works overheads, which is factory overheads, is charged to the WIP account. So now by balancing this account, we will find this as our balancing figure. That is the amount which has to be charged to WIP. So 160, 40 is 200, 211. Correct? 211 minus 8 is 203. 203 minus 20 is 183. 183 is the balancing figure, students. So even this is closed. Selling, distribution, administration, we will transfer it to cost P&L. Selling, distribution, administration, transferred here. Now, we come to WIP. Now in WIP, we generally find out the closing balance, but here closing is given. So we should get something else. Now what we get something else is, from WIP, the goods which are finished are transferred to the finished goods account. So here we get this transfer amount as our balancing figure. So how much it is? 70, 170, 175. 175 plus 183. 358. And 358 minus 25 is 333. So the balancing figure I'm getting, students, is 333, which will be transferred here. correct? Now again in finished goods students, we need two things. One is the cost of goods which are sold and closing balance. Now here nothing is given. However, there is one adjustment in the question which will help us find out cost of goods sold. What is that adjustment? See, they had given company's gross profit margin. They are saying the gross profit margin of the company is 20% of sales. Now, if from sales you subtract the gross profit, what will be left is correct. So 450, 20% of 450, 90, 360. So we get this figure. $360. Now we can find out our balance. So this total is 763. So 403. Yeah. Two finished goods by cost P&L. So this is already tallied. And this amount will come here. So now you can find out your net profit. And this net profit will be transferred to the CLC account because CLC account also represents your profits, reserves, surpluses. So CLC represents all the assets, liabilities except stocks. Which is it coming to students? 33. 33. Is everything correct? Sorry. I should have transferred 360. I have transferred 403. 403 is the closing balance. At times such mistakes may happen. So 360 and this is 33. So 393. So I get 57 as the profit, which I transfer here. I'll get the balance. But before that, sorry. Didn't see one account is left. What are they saying? During the year, this building is complete. Now, when the building is complete, it is transferred to CLC because CLC represents all assets and liabilities. So 10 plus 4, 14, 14 plus 30, 44. Building construction 44. So now I'll get the balance. Correct? Let us use calculator now. So we have 450, 40, 150 plus 40 plus 150, 160 plus 5, 25. So this total is 887 minus 415.4. So the balance, students, is 393. Kavya, I hope you also got these entries and the answer. Yes, students, I hope you all are getting these answers. Done? Understood by all? Anybody? Something not understood? Let me know. Okay, so it is understood. Great. So let us then proceed to the next question, students. Take a screenshot again. Yes, you can take a screenshot of this. So anyways, here they have asked what are the requirements here. So you can, I'm just zooming it. Take a screenshot. Then screenshot taken. Now again, this question is a very interesting question, students. Why it is interesting? Because this question is more of, if you remember, the single entry type of question where the details are missing in the question and you have to complete the details using the available information, right? Now, what are the things given? The following incomplete accounts are furnished to you. You are supposed to do what? See, so what are the accounts given? This is as on 31st March. SLC, so material account is given, WIP is given, FG is given. So these are all the stock accounts. Then factory overheads is given. Now see, unnecessarily for confusion, what they have done, they have said factory overheads where they have given debits, which says total debits of October, and purposefully they have given factory overheads applied. See, factory overheads applied need not be a separate account. We pass credit entry for factory overheads applied. Correct? This is blank. And interestingly, students, here you have creditors account. Now, if the method of accounting is non-integrated, which was the previous sum, you will not have debtors, creditors, cash, bank, fixed asset account because all is merged in one account called as CLC. But if it is integrated, you will have a separate account for all assets and liabilities. So here if creditors account is given, so indirectly we can understand that this sum is of integrated. Now anyways, in this sum, you are required to prepare and find out the missing figures. So for that, we need not prepare all the accounts. We will prepare only these accounts which are relevant which are required and which has the details. So let us start. Again, if you want, you can start entries at your end first. So, so here, since it is a missing figure sum, I will only pass or I will only prepare the accounts which are relevant to us and which are given. So SLC given, WIP given, finished goods given, factory overheads given, creditor for purchases or creditors for materials given. So we will limit ourselves only to those accounts which is relevant to us, which is given in the sum. And in case any new account is required, we will take it from there. Okay, so let us start. Again, parallelly, I request that you all keep solving at your end. First thing you should do is always post the balances. So material has 54, WIP has 6, finished goods has 75. So this is balance brought down. Then overheads debit is 45 and creditor for purchases is 30. Done? Should we start? Now, first entry says factory overheads are applied by using a budgeted rate based on direct labor hours. The budgeted overheads is 675 and the labor hours is 450. Now see, we'll have to ourselves understand what data or information you derive from all this. So calculation of overheads recovery rate, budgeted 675 and 450. So let us find out how much are we getting. 675,000 divided by 4,50,000. So I'm getting 1.5 per labor hour. Okay. The balance in the creditors on 31st October, that is the last date, is 15. Payment made to creditors is 105. To bank. Now, since we are following integrated, we'll write bank and to balance carried down. Now, if you recall your accounting, in a creditors account, you'll have opening balance, you'll have payments, you'll have closing. Then what is missing is the purchase entry. So I get the purchase entry. So this is the balancing figure representing credit purchases, correct? So it comes to 90,000, which I will post to the SLC account. So creditors 90. Then clear. Now finished goods inventory on this date is 66. Okay. Right. Okay. Cost of goods sold is 195. So we can have COS account by COS. So 2FG 195. Okay. On 31st October, there was only one unfinished job in the factory. The cost records show that 3,000 rupees, which is for 1,200 labor hours, and 6,000 for material cost has been charged. Now, this will help me do the valuation of closing WIP. So direct material, direct labor. So direct material, they are saying 6,000. Direct labor 3,000, which represents 1,200 hours. Now, how much will be factory overheads? We have already calculated factory overheads are charged at the rate of 1.5 per labor hour. And the labor hours given on this job is this. So into 1.5, 1,800 will be my overheads charged. So my value of closing WIP comes to, so in WIP account by balance carried down, working note 2, 10,800. Correct? So this is my second working note, which has given me the closing balance of WIP. Then it says total of 28,200 direct labor hours were worked. All factory workers earn same rate of pay. Now, what is to be determined? Labor rate, labor cost, and work overheads, or sorry, factory overheads charged. Now, how I'll find out labor rate? So, for WIP, they had given that labor cost is rupees 3,000 for 1,200 hours worked. And here they have said that all workers are paid at the same rate. So if I divide the labor cost by labor hours, I will get the labor rate. So how much it will come to? 12 2s are 24 and yes, 2.5. So this is my labor rate. Now, on the basis of this, I can find out labor cost for October. How? Labor hours worked into labor rate. How much is the labor hours worked? 28,200. So how much it comes to? 28,200 into, it is coming to, now interestingly, they have not asked labor account, but let us say, just for our convenience, I am opening the labor cost control account. So debit to bank, how much account? 70,500. And since this represents direct labor, I'll charge it to WIP. To labor cost, right? Now, I can also find out factory overheads charged. How? Same, labor hours worked into the overhead recovery rate. So this is 28,200 into how much was our overhead recovery rate? It was 1.5. So how much it comes to? 42,300. WIP 42,300. Correct. Done. All actual factory overheads have been posted, fine. And now you are required to find out the balances. Okay. So what we will do, now we'll start doing balancing. Now, material account has opening plus purchase, but on trade two things are missing, so I cannot complete this. WIP account, I have opening, labor cost, overheads cost, closing. Again, two things are missing, I cannot close this. Then I come to FG, you have opening, you have sales, you have closing. So here I get the missing value of the cost of goods which are transferred from factory to your finished goods after completion. So this is the balancing figure. So how much it comes to? -75. 74, 7, 1 second, so some type of 186. This will now be posted here. Now I'll find out the balancing from here, which represents material. -42,300. So I get the balancing here as 78,000 representing the material. So this account is closed. Now from here I come to material. So 78. Now the total is 144. So here the closing balance 66. Correct? So this account is closed. This is closed. This is closed. This is closed. COS anyways will go to cost P&L whenever you prepare. So this is closed. This is closed. And again, this amount of under over absorption will be transferred to cost P&L. So this is also closed. So what were the questions asked? Material purchased, we have found out. How much we had found out? This was the first thing we found out. It is 90. Then goods completed. This is what we found out is this 186. Overheads applied. So we found out this 40 to 300. Balance of WIP. We found out this. Direct material consumed. We found out this. Balance of material. We found out this. And the amount of under or absorbed overheads, the last one which we found out is this. Students, this is how we have computed our entire this single entry type of question and found out the different missing values. So see, these are some different type of sums that you may have to cater to. Right, students? I hope this question is clear. Yes. Anybody, any queries on this question, students? Is it clearly understood by all? Perfect. Great. Now, see, this is one more question on cost accounting. But then after the break, I would like to now start with the next part, which is also equally important. That is the reconciliation. So if time permits, we'll go to this sum, or else we have already solved two sums. So after the break, I would like to go to the reconciliation part. That is the reconciliation between profits as per cost accounts and profits as per your financial accounts. Fine. So we take our 15 minutes break here and we resume at 8:30. Students, now see, in reconciliation, what are we supposed to do? So you have to understand one thing that, as I said, we follow non-integrated method of accounting. Now, in non-integrated method of accounting, there are two set of books which are prepared. So first is your financial set of books, and the other is your cost accounting set of books. Now, because two set of books are prepared, you may get two profit figures which would be different. Now, why these profit figures are different? Why the financial accounting and the cost accounting profit figures are different, though it pertains to the same business for the same year? The reason is that in financial accounting, the expenses which we debit are on actual basis, whereas in cost accounting, the expenses which we consider are expenses which are charged using some charging rate. Now, because of this, since expenses are charged using some charging rate, that is why the first difference arises on account of difference in the expenses figures. Second difference arises in the stock valuation figures. Now, since the expenses here are on actual basis, the stocks are valued taking actual expense. Since here expenses are on estimated basis, the stocks are being valued taking these estimated expenses figures. Correct? Then comes the next point. The next point is that besides this, am I audible, students? Sir, am I audible? Because my video, I think, is stuck because at my end, I'm not able to see any movement in my video. Is my video visible clearly at your end? Okay, fine, fine. Take it. So, first difference is of expenses, which is actual versus charge or estimated. Second difference is in stock valuations. Third difference that arises is because in financial accounting, you consider certain financial incomes which are absent over here, like interest received, discount received, or maybe some other incomes besides your normal business incomes like rent received. All these are not considered in cost accounting. Similarly, there are some financial expenses again which are missing in cost accounting, like bad debts or reserves or any type of abnormal item. So these are those expenses and incomes which are purely of financial nature and which do not find place in cost accounting. And then comes last point. In cost accounting, we consider notional expenses, whereas no such notional expenses are considered in cost financial accounting. So we charge even notional expenses in cost accounting. Let us say salary to the proprietor. Now we all know these are never considered in financial accounting. We never debited them in our financial P&L. But costing says we want to find out the true value of your goods or service. Now, if the owner itself is one of the employees who is providing or acting, in that particular case, the owner's salary has to be charged. Similarly, if owner's premises are used, owner's premise value, that is rent, depreciation has to be charged. So these are some notional expenses which do not find place in do not find place in financial accounting, but are to be considered in cost accounting. Now, these are the reasons which create difference between the two set of accounts. Now, what are we supposed to do in these sums is, generally you get this type of question where the differences are already identified and given. You are only required to do the reconciliation part, that is add or less. Now here, the starting point is profit as per cost accounts, and we have to find out profit as per financial. Now there are two approaches of doing this. One is you can prepare a reconciliation statement. So reconciliation statement is like our bank reconciliation statement. Or second, you may also be asked to do the reconciliation using the memorandum reconciliation account format. So statement format, we all know. So in a statement format, what you will do, you will take profit as per the, let us say in this question, cost accounting is given, you will do cost accounting profit, which is the starting point. And then you will decide the add and less for the differences. So you will reach the other profit. So this is our statement format, which is same like what we did in BRS, that is bank reconciliation statement. However, here we have another format which is called as the account format, which we call as memorandum reconciliation account. Now for this account, if the same thing has to be done by this format, how it will be done? Now, since our starting point is profit, we all know profit has a credit balance. So we will start it on the credit side by correct. Now, whatever you have decided as add, that should be posted on the credit side so that automatically it will get added in this value. So whatever we identify in the question as this difference should be added, we will put it on the credit side. Similarly, whatever you identify as to be subtracted, we'll put on the debit side. So automatically these will get subtracted from the profit. And then the answer will be your profit as per the financial books, which will be the closing balance. And again, you all know that closing balance profit always comes on the debit side. So when we are carrying forward in the profits, it is on the debit side. So it will come here as your closing balance. So this is how you have the reconciliation account format. Correct, students? So let us see. Now in this, you are given all the differences. We'll have to first decide the add and less. Now, how do we decide the add and less? So for this, I always follow this approach. For me, this is the most simplest approach to understand what is to be added, what is to be subtracted. So these two hand represents my two levels of profit. So let us say this is profit as per cost accounting. This is profit as per financial accounting. Now what we will do is we will try to understand what is the impact of this difference on both these profits, cost accounting, financial accounting. Once you understand the difference on both these profits, you will be able to answer correctly as to whether the difference should be added or it should be subtracted. So let us start. Now, what is the first difference saying? It says works overheads under absorbed. So there could be parallel words under recovered, under absorbed. It may also be called as under charged. Now, firstly, students, you should understand what this adjustment means. Because until unless you understand what it means, you'll not be able to identify what is the impact on these profits. So, as I explained, what happens is in financial accounting, the figures of expenses are always actual figures, whereas in cost accounting, these are the figures which are taken using charging rates. So these are the figures which are charged or absorbed. Now, if the figure of expense in your cost accounting, that is the charged figure, is higher as compared to the actual figure, which we can also say that it is the actual expense incurred. So if charged is more and incurred is less, this is a scenario of overcharging because charge is more. Overcharging, over absorption, or over recovery. Parallel words. Correct? Had this been vice versa, that charged is less and the actual figure is more, we would have called this undercharging, under absorption, under recovery. So you have to first understand what is the meaning of the adjustment given, right? Acha. Also, I'll solve this sum by the reconciliation account format because this is a new format to you. And many times in the question of the exam, this is only asked. If statement is asked, you all are well versed with the format. So let me take you to the new format for this question. So it is 145, 500. Correct? Now, what is given over here? Works overheads are under recovered. Under recovered, under charge means what? That, please understand the meaning, that the expense is more in financial books and less in cost accounting books. That is why it is under charge or under absorbed. Now, please understand what will be the impact on your profits. So these hands represents profit. This is cost profit. This is financial profit. Now, what is said? That the expense is under charge, which means what? The expense is higher in financial books. That is why it is under charge. Now, if it is higher in financial books, what will be the impact on financial profit? Financial profit is less. Why? Because the expenses are higher in financial books. So financial profit is less. So what is the impact of this adjustment on both the profits? Financial profit is less, costing profit is more. Now, once you're able to identify this difference, answering is very easy because if financial profit is less, costing profit is more, you have to simply come down and you will subtract this. So the answer to this adjustment is that you will subtract this. To work, correct? Is the first point clear to all students? So first difference given is works overheads are under absorbed. Under absorbed means the expenses are higher in financial books, lower in costing books. If they are higher in financial books, so the impact is financial profit is less. And if the financial profit is less, now in this sum, our starting point is costing profit. Please remember this. So you have to also check what is the starting point. My starting point is your costing profit. So since my starting point is costing profit, I have to climb down. I will come down and hence it will be less. Administrative overheads under recovered, same treatment. right? Now, selling overheads over recovered. Now we know what is to be done, but we'll again check for our understanding purpose. Now, what does over recovered means? That the expenses are higher in costing, lower in financial. So again, now you can check it from any side. So you know that the expenses are higher in costing books, less in financial books. So what is the impact if I have to check from the financial angle? So since the expenses are less in financial books, this is profit. So what will be the impact of profit? Profit will be higher. Because the expenses are less, the profit is higher. Now, in our question, our starting point of reconciliation is costing. So I'm standing here. I'll have to climb upwards. So my adjustment would be add. What you'll write? Buy, because it is an account format. And then you repeat the name. Selling overheads. So you'll repeat exactly what is given over there. But you have to write 2N. Why? Because we are following the accounting format. Now comes some other adjustments. Bad debts written off. Now, bad debts is purely a financial figure. It is a financial expense which is not considered in costing. Again, now this is a financial expense, means it is only charged in financial books. Now, if it is charged in financial books, what is the impact? The impact is that because of this figure, the financial profits would be lowered. Why they are lowered? Because this is an expense which is charged only in financial books. Since it is charged only in financial books, the financial profits are less. Now again, where are we standing? We are standing at costing profit because our starting profit is costing. So I have to climb down less. Fine. Now, overvaluation of opening stock in costing books. Again, see, in your cost accounting books, the opening stock has been overvalued. Overvalued means as compared to financial costing is showing a higher opening stock. Now, please understand, opening stock is a debit item. Now, if debit item is higher, what will be the impact on profit? The profits would be lowered. Which profit? Costing profits. Why? Because this opening stock is overvalued in costing books. So it means in costing books, the debit side is higher. And as you all know, if in P&L debit side is higher, the net profit is lower. So what is the impact of this adjustment? The impact of this adjustment is that the net profit of cost accounting is lowered by this figure. Now, once you have got the level, now what we'll do, we will see what is our starting point. Our starting point is this only. So I have to climb upwards. Perfect. Next is overvaluation of closing stock in cost accounting books. Again, closing stock is a credit item. Now, credit item is overvalued where in cost accounting books. If it is overvalued in cost accounting books and it is a credit item, what will be the impact on net profit? Net profit will increase. Why net profit will increase? Because this amount is a credit amount and the credit is higher in your cost accounting books. Now, if credit is higher in cost accounting books, the impact is the net profit of cost accounting is higher. So firstly, this is the level. Now we are going to climb down because our starting point is cost accounting because that is what is the profit given. So we have to climb down. So less. So to overvaluation of opening stock in cost accounting. Next, interest earned. Now, this is a financial income. Interest earned is covered only in financial books. Cost accounting books do not cover these items which are of financial nature. Similarly, rent received, both these are financial incomes. Now, what is the impact? Now, since these are financial incomes, the impact is only in financial books. In financial books, the profit would have increased because of these financial incomes, which are not in costing books. So my financial profit is higher. Again, my starting point is this, that is costing. But the point is my financial profit is higher, so I have to reach upwards, climb upwards. 3,750,027,000. Interest and rent. Correct? Next, preliminary expenses written off. Again, all these things, writing off of obsolete stock, writing off of something which is of no use, all these are so these are financial expenses. Now, for financial expenses, again, what is the impact? Now, since these are financial expenses, they are there only in financial books. And because of financial expenses, the financial profit would be lower. So the impact of this adjustment is costing is higher, financial is lower. What we have to do, we have to climb down. Correct? Now, after all the adjustments, we will find our balancing figure, which will be profit as per financial accounting. So students, I hope you have understood the process of add less, process how you will determine what effect is to be given. So let us do the balancing. So I'm getting 144. Correct? Students, 144 is correct. 750, yes, according to it is correct. Students, should we proceed to the next question? If this is clear to all? Yes. Good. Now, within this reconciliation, one type of question is this, where you are directly given the differences. But then in the exam, you may get different types of questions. So final result is same, you have to do reconciliation, either by the reconciliation statement or by the reconciliation account. But the question which is given may be in different formats. So first type of question is this, where straightforward differences are given. Second type of question is this. Now in this question, you are not given the differences straightforward. Rather, you are only given the company's financial data in the form of trading P&L account. And then what is given is Profit as per cost is given. Chalo. So we have both the profits. Financial profit is there in P&L. Cost profit is given separately. You have to reconcile financial and cost. But what is important is this data is exclusively financial data. Now for costing, they have said that out of the above, where certain values are different in costing, they have given those values. What are they? The cost accountant's value of closing stock is different. The work expenses are to be taken at this rate. Selling overheads, administration overheads has to be taken at this rate, and depreciation has to be taken at this. So now what they have done is they have given you parallel cost accounting values. Now what you are supposed to do in this type of sum is when you will observe these details of debit and credit, you have to first identify those items which are exclusively part of financial books, not part of costing books at all. That is the financial incomes and financial expenses. So if there are any financial incomes, financial expenses, you know that you have to anyways adjust them. For all other items which are operating incomes and operating expenses, you have to compare it with the corresponding values given of cost accounting. Where no corresponding value is given, it means the value in both the books are same. So this is how in this second type of question, you will approach and you will find out or you will reconcile the profits. Now again, here they have simply said reconcile the profits. They have not mentioned the method. Let us over here do the statement format. So that also gets revised. And here we take the starting point as profit as per financial books. Here both are given. You can take any one of them as the starting point. So I'll take profit as per financial books as the starting point. So 2,03,000. Now you all know that in this type of reconciliation format, we have to do what? We have to find out what items have to be added, what has to be subtracted using the same method of this profit balances, correct? First, these are the financial incomes which do not appear in cost accounting books. Now both are financial incomes. Means what? Both are credited to your profit and loss account. Because of both these items, the net profit as per financial books would be higher as compared to costing, correct? So these are financial incomes appearing only in financial books. So the impact of this is that financial profit is higher. Now in this question, my starting point is this only, financial profit. So for this difference, I will have to climb down. So what I will do is I'll subtract these two figures, 2,600, 23,400. Discount received, profit on sale of land. Fine. Okay. Now, sales is anyways operating, so that will remain here. Then you have purchases, no adjustment given, so it remains as it is. Now for closing stock, financial valuation is 4,800, costing valuation is 42,800. So there is a difference of 2,000. Now, what is this difference? I will say it is undervaluation of closing stock in financial accounting. So here we have to also create that language adjustment so that you can write it in your answers. So what I will call this 2000 as, see, financial books is showing 4,800 as the closing value and costing books is showing for the same closing stock, the value as 42,800. So 2000 is the difference, which represents the difference of closing stock, whereby the closing stock is undervalued in financial books. Now, since it is undervalued in financial books, what is the impact? Again, we are looking at a closing stock. Closing stock is a credit item. Now, if credit item is undervalued, if it is undervalued, what is the impact? Because of credit being undervalued, the impact is profit will be lowered. So where this profit is lowered? In financial books, because this is undervalued in financial accounting. So in financial books, because the credit is lower, the profit is lower. So what we have to do? We have to climb upwards. So for 2000, I'll have to add. Next, direct wages, no adjustment given. So we assume they remain same. Then work expenses. Here it is this amount. And what is the work expenses given? It is 100% of direct wages. So it means here it has to be 120. No. So in cost accounting, it has to be 1 lakh, which is 100% of direct wages. Now, work expenses are 121,300 here and 1,05,000 here. So the difference is 16,300. Now, what will be this 16,300 called? In financial books, they are more. In cost books, they are less. So we'll say that 16,300 is under absorbed because it is less in costing books. So whenever expenses are less, it means it is charged less or recovered less or absorbed less. So we'll call it as under charging, under recovery, under absorption. Now, again, impact. So in financial books, the expenses are higher as compared to costing books. Now, if expenses are higher in financial books, what is the impact on financial profit? The profit would be lower. So the impact of this adjustment is that the profits are lowered in financial books as compared to costing books. Again, our starting point is financial books. So add. What we will say? Work overheads. Now, when you are saying under absorb, you need not mention under absorb in costing books because that is obvious because absorption happens in costing. So if you are saying under absorption, it is by default, it is in costing books. Next, selling expenses is 71,000 here, and here it is 10% of sales. So 10% of sales will be, sales is 750. So selling overheads will be 75,000. Now, if selling overheads are 75,000 and here it is 71,000. So what is the adjustment that I'm getting? The adjustment I'm getting is selling overheads are over absorbed. How much? 4,000. So that is the difference between selling overheads. And in case of selling overheads, they are higher in cost accounting. So we will say it is over absorbed, overcharged. Now, if selling expenses are higher in cost accounting, it means costing profit has to be lowered because expenses are higher in costing. We are standing at financial figure of profit, so we have to climb down. So 4,000 will be less. Next come admin. What is given for admin? It is 1 per unit. So units are 50,000. So as per 1 per unit, this will be 50,000 rupees. Now, financial book shows 53,400. We are showing 50,000. So what will be the adjustment? So administration are under absorbed. Under absorbed means in financial books, they are more. In costing books, they are less. So let us say from costing perspective, it is less, sorry, it is less in costing. So if it is less in costing, so the effect is if expenses are less in costing, profit is higher. Again, our starting point is financial will go upward. So we'll have to add 3,400. Correct. Depreciation 11,000 here, 8,000 here. So again, for depreciation, what is the adjustment? Depreciation under absorbed under charge because it is less in costing by 3,000. Same. Expenses are more in financial, less in costing. So effect is, if you are looking at it from financial perspective, since expenses are more here, profit is less. Again, what I'll have to do, I'll have to climb upwards. Done. So all adds, all lesses. So you will get your here we are also given that profit. So you can even cross verify. So let us do the workings. So we have starting point as 2,03,000. Add. Right. That less is 25, 26, 50. So final answer is 197, 700. Correct, students? We are given yes. So it is coming to the same. Right? Now let us take a sum where loss figures are given. Now, many times I've seen that in reconciliation type of questions where a different figure is given, like instead of profit loss is given, many times students are confused, especially with the add and less. Also, they get confused in the reconciliation format. So what I'm going to tell you, please pay attention. That will make it easy for you to understand. Now, in this question, you are given figures of loss. One is as per costing, one is as per financial. So both are given. We can take any one as the starting point. Now here there is nothing to get confused. Now both these hands will represent losses. Till now both these hands were representing profits. Now both these hands will represent loss. So this is my loss as per costing. This is my loss as per financial. Right? And again, I'll follow the reconciliation format. Now, in the accounting format, see what logic I had given in the previous sum, that since profit opening balance is a credit balance, you write it here. On the same logic, if you are taking balancing figure, the starting point as a loss, you'll write it on the debit side. So I will say loss as per, let us say I take cost accounting figure, both are given, you can take any one. So I'm taking cost accounting figure, so it is 572. Now, students, please keep in mind, in ledger, you don't write minus figures. So we will not put it in bracket or will not consider it as minus. Anyways, we have put it on the debit side because it is a loss. So this itself is sufficient. So keep that in mind, because many times in your reconciliation statement format, during your BRS days also, you had taken a negative value whenever overdraft was given, but we don't do any such negative values in accounts. In accounts, it will be simply the debit side balance. Now, what are the differences? Factory overheads over absorbed. Again, firstly, be clear with the meaning. When you say any expense is over absorbed, it means the expenses are higher in costing books and lower in financial books. Now, both these hands represents my loss. Now, if I'm saying expense is higher in costing books, what is the impact of this on my costing loss? Till now, you were checking on profits. Now you have to check the impact of this on costing loss. So if expenses are higher in costing, so the loss will increase. So the impact of this is that costing loss will be higher. Now, since costing loss will be higher, right? So this is the impact. Now we have taken starting point as costing loss only. So we will have to climb down. Climb down means less. And here less will be by putting that figure on the credit side. I hope this is clear, students. So factory overheads overcharged. Overcharge means expenses are more in costing. And here my hand represents loss. If expenses are more, what is the impact? The loss will be higher. And since the loss is higher, so I get these levels of losses. Now I've taken starting point as costing loss. So I'll have to climb down. So I will subtract. And for subtract, since opening balance is written on the debit side, for subtract, you will put it on the credit side. Right, students? Now comes administrative overheads. Under absorbed. Under absorbed means expenses are less in cost. Now again, both these hands represent loss. Now what they are saying, that the expense is less in costing books. Now if expense is less, what is the impact on loss? The loss will reduce. So the expense is less, so the loss will be less. So I'm having this as my difference. Now what is my starting point? Starting point is my costing. So what I will do, I will climb upwards. So I will add. So 24,000 is add. For add, I'll put it on the debit side because the opening figure is on the debit side. So it will get added. Now, depreciation in financial books, 220. In costing books, 245. So the difference is 25,000 over absorbed. Correct? So in financial, it is 220. In costing, it is 245. So the difference is of 25,000. And by 25,000, the amount is higher in cost accounting. So we'd say 25,000 is over absorbed. Again, what is the impact on losses? The expenses are higher in cost accounting books. Since the expenses are higher in cost accounting books, your cost accounting loss would be higher because these hands now represent losses. So my cost accounting loss is higher. Again, my starting point is this, so I'll have to come down less. Again, for less, we'll put it on the credit side. Depreciation over absorbed. I hope it is clear to you all students. No confusion, no doubts. Even in loss sums, I have kept the ideology same. I have kept the methodology same. So I'm sure there should be no confusion at all. Just you have to keep in mind the conceptual part, like first, since loss is having a debit balance, so you will write the loss on the debit side of this reconciliation statement. So your starting point of loss, whatever you are taking as a starting point, will be written on the debit side by calling it as 2. So 2 loss as per cost accounting, right? Now comes next. Now see, interest on investments is a financial income, and financial incomes, financial expenses are only in financial books. So that is also mentioned here. It is not in cost accounting books. Now, it is a financial income. So what is the impact on net loss of financial? If it is a financial income reported only in financial books, so the effect is the net loss of financial books should come down. So because of this financial income, the effect is net loss of financial books will be less. Again, my starting point is costing loss. So since the starting point is costing loss, I will come down. So interest on investments less. And since I have to less, I'll put it on the credit side so that automatically it will get subtracted. Income tax. Now, income tax, as you all know, is an expense. Again, it is only a financial expense. We do not consider in costing. It is only considered in financial books. And if there is an expense considered in financial books, what will be the impact on the financial loss? The financial loss will increase. So because of this income tax, financial loss would be increased. My starting point is costing loss, add. Next, interest on loan funds. Now this is your expense, and this is again an expense of financial nature, hence appearing only in financial books. Now what is the impact? Since you have a financial expense, the impact on financial loss will be that financial loss will increase. So because of a financial expense, financial loss is higher. My starting point is costing loss. I'll have to add. Next, transfer fees. Now they've mentioned what is done. It is credited in financial books. Similarly, store adjustments, it is also credited in financial books. Again, both these are income items. Credit means income. Now, both these are there only in financial books. Now, if there is an income in financial books, what is the impact on the financial loss? The financial loss is lowered. So because of these credit items, my financial loss is lowered. Again, my starting point is costing loss. So I'll have to come down. Transfer fees and store fees. Fine. Okay. So now we'll do the balancing. So starting is 572 plus 24. So this is I should reach loss as per financial books or financial accounts. So less 16 and 5 64. So I'm getting my loss as per financial books as 884. Yes. So it tallies 884. Hmm. Fine, students. Have you understood this? So this is how you will be solving reconciliation sums, both of profit balances or of loss balances, and by both the formats, that is either the statement format for reconciliation or the memorandum reconciliation ledger account format, right? Now let me take up this one sum. We can discuss this out so that now this I have taken off integrated. There is less chances of integrated as practically also mainly non-integrated is followed, but academically, since this may be asked, we have to just look through it. Now, in case of integrated, what is the difference? Now you'll have all the respective assets and liabilities accounts to see. So you're having all these balances. So first, now you'll be opening all accounts separately. So SLC, WIP, FG is already there. But now instead of CLC, which we prepare in non-integrated, we prepare CLC. In integrated, you will prepare separate accounts. So bank balance, creditors, fixed asset, debtors, share capital, provision for depreciation, provision for doubtful debts. And then you also have some overheads which are having balances. So since factory overheads is having outstanding, so it is having a credit balance. Administration is prepaid, so it is an asset, it is a debit balance. And P&L always has a credit balance. Generally, it may have debit balance also, but generally it has credit balance. So you'll open all these accounts and now you will start passing entries. Now what will be the entries? First is wages, direct and indirect combined is 209. So first is expenses incurred. So it will be LCC, which is the wages account debit. And now here, since it is integrated, we will use the word cash bank. Now, I have some direct, I have some indirect. So what will be the entry? WIP, debit for direct, factory overheads, debit for indirect, and 2 LCC, that is a labor account credit for the total. So first entry you will pass for incurring the labor cost. Second entry you will pass for charging the labor cost. Fine, students. Next, purchase of material on credit. So material account debit to creditors because it is on credit. And now under integrated, you have a separate availability of account head for creditors, debtors, etc. So we'll pass it through the creditors account. Material is sent for production. So production account, which is the WIP account debit, and material account, which is the SLC account, will be credited. Used for repairs. So again, factory overheads debit. And since material has gone out, right, students? Now, goods which are completed, that is manufacturing is complete. Whenever manufacturing of goods are completed, they move out from the factory or the production area to the godown, that is the finished goods. So finished goods account is debited because it represents the stock of goods which are completed and it is sent from the factory. Then come credit sales. For credit sales, first you pass the entry for sales, which will be debtors to sales. But as you know, we do not have sales account. So we pass the second entry also where sales is transferred to cost P&L. So these are the two entries. Now in this, since we are not having sales account in our books, debit credit will get nullified. So the final entry that you get, students, here is debtors accounts to cost P and L account. Then cost of goods sold. Now cost of goods sold is you transfer these to your COS account from the finished goods account. So in finished goods, we were keeping the stock. Once the stock is sold, it will be credited to the finished goods account. Right? Clear to all students up to this point? Now factory overheads absorbed means charged. So where they are charged to WIP. So WIP debit, factory overheads credit. Factory overheads paid to cash bank. Now something new. Production overheads outstanding. Now what do you do for outstanding or prepaid? We carry it forward. So it means this is the balance to be carried forward, and this is the balance to be carried forward on the debit side. So in your production overheads account, you will do what? You will say to balance carried down. So this will represent the outstanding production overheads. Next, administration paid. So administration debit to cash bank. Similarly, selling overheads incurred. Selling and distribution overheads debit to cash bank. Payment to creditors. So creditors are getting money, so creditors debit to cash bank. Vice versa, you are receiving payment from debtors. So cash bank to debtors. Now something important, depreciation of machinery. Now see, depreciation is an overheads. Since it is of machinery, it will go to which overheads? It will go to your factory overheads. We do not have any depreciation account, rather we transfer it to the respective overheads account. So for us, it is a factory overhead, so factory overheads debit. Now importantly, if you see the opening balance, you have something called as, in accounts you would have studied that for passing the entry for accounts, we have two mechanisms. One, either we credit the asset account or we credit the provision for depreciation. So here it will be factory overheads debit to provision for depreciation credit. Next, administrative overheads outstanding. Same thing we'll do in the administration overheads account. Then administration overheads charged, where they are charged to finished goods. So finished goods to administration overheads. Selling overheads charged, where they are charged to cost of sales account. And then they are saying provision for doubtful debts at the end of the year. So how it will happen? Provision for doubtful debts will happen by the entry So if you remember your 11th standard accounts, we used to debit the RDD. So provision for doubtful debts at the end of the year will be debited to cost P&L. The opening balance, which was the last year's provision, will be credited. So if you remember in our 11th standard accounts also, old RDD credit, new RDD debit to P&L. So same thing we have done over here. Cost P&L debited with the fresh RDD, and the opening RDD you will transfer it to cost P&L on the credit side, so it will get nullified. So this is how students will have to pass the entries, and where required you'll have to do the postings in the accounts and then balance each and every account. Is this clear, students? Everything clear to all students? Yes, students, understood? So we have covered everything. We have covered cost accounting, all types, integrated, non-integrated, missing value, single entry, and we have completed the reconciliation all types with profit balances, with loss balances, with starting point as costing, with starting point as financial, and in the reconciliation statement also, and in the reconciliation memorandum reconciliation account format also, right? So with this, we complete the entire revision of this part. The job and batch cost sheet, if you remember in our previous lecture of cost sheet, we had already covered sums on all types of cost sheets, including job, batch, etc. So that is why I did not repeat it over here. And anyways, cost accounting required more time to cover all aspects. So we have covered all aspects of cost accounting, and the job and batch cost sheet has been already covered in the previous class of cost sheet. So with this, we conclude today's session, students. Be connected, attend live, so that even if you have doubts, you can ask it live. And we at BOS are always there to give you all possible backup, all possible support. So be connected. And for any queries and doubts, you can post us. Fine, students. So thank you. Thank you very much.